The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States?
Tom Lee and Michael Saylor recently discussed Bitcoin's current price and its future potential. Lee acknowledged that while Bitcoin's price of $62,000 might seem concerning to short-term traders, it still represents a massive return compared to its value a decade ago. He emphasized that Bitcoin's utility and trust are growing, and it is increasingly being viewed as a store of value akin to gold. Despite short-term volatility due to market turbulence, Lee remains optimistic about Bitcoin's long-term prospects, predicting significant growth in adoption and trust over the next 5 years. Saylor echoed similar sentiments, highlighting Bitcoin's resilience and potential as a long-term investment. He noted that while external factors like tariffs and market sentiment can impact Bitcoin's price in the near term, its fundamental value and role as a digital store of value remain intact. Both experts agree that Bitcoin's future is bright, with room for more investors to enter the market and further solidify its position as a leading asset class. In addition to Bitcoin, Lee discussed broader market trends, including the impact of tariffs and Federal Reserve policies. He suggested that while tariffs could create economic headwinds, they might also force the Fed to adopt a less hawkish stance, potentially benefiting risk assets like Bitcoin. Lee also pointed to opportunities in financials and small-cap stocks, emphasizing the importance of a long-term investment strategy amidst market uncertainties. Overall, both Lee and Saylor remain bullish on Bitcoin's future, despite short-term challenges.
Are you surprised that in the announcement over the weekend, the president mentioned other smaller coins like XRP, Solana, and Cardano, as well as Bitcoin for the Strategic Crypto Fund?
I'm not surprised. I mean, I think there's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward is just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States. I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States, and ultimately there's 4 different assets that people need to come to grips with. A digital commodity like Bitcoin, an asset without an issuer backed by digital power. A digital currency like a stable coin backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy, and as the market gets more educated, we're going to see more progressive, constructive policy engagement. The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States? I don't think anybody's ever lost money in the Bitcoin network holding 4 years. The United States' best investments are Alaska, Mexico, California, and Louisiana, and Manhattan. We're still holding them hundreds of years later. It's a nation state. So presumably, you want to buy Bitcoin, you want to hold it for 100 years. You know where the future's going. The AIs, the foreigners, the Europeans, the 20th century capitalists, they're all going to cyberspace. And so the United States has the ability to buy this for a nickel and pay off the national debt. It'll be the greatest economic program of the 21st century for this country. Bitcoin's not highly speculative to the 500 million people in the crypto economy. It's the best performing asset in the past 15 years, and generally the best performing asset every single year. My company's gone from a $250 million investment to almost a $50 billion position in 48 months. So clearly, there's enormous economic energy in this asset. It is probably the most certain thing in the financial universe if you have a long time horizon. The reason that there's so much support for a commodity like Bitcoin is it is an asset without an issuer. No entity controls it. No entity runs the network. No entity can change the protocol. No entity has enough power to impact the market trading of that protocol. That's actually why most of the focus is on the digital commodity. And that's what makes Bitcoin special. Satoshi was the insider. He left 1 million Bitcoin for all of humanity forever and walked away without ever benefiting. And that's what makes Bitcoin special.
Do you think that any other asset should be in the strategic crypto reserve?
You know, I think if you're looking out over the next 100 years, trying to figure out how do you capitalize a nation state or a country, what you want is a digital commodity. But if you have a sovereign wealth fund, then I think it's well within the rights of the leader of the nation to decide to put, proprietary assets, securities, tokens, and the like into it. And of course, the decision will eventually be made through a fairly comprehensive political process over the next 6 months. We have till July 22nd, when the digital assets framework and recommendations from the executive order are due on the president's desk. It should be interesting to watch what happens between now and then.
Tom Lee, a renowned finance expert, believes Bitcoin's long-term potential remains extraordinary, even amid short-term market volatility. While acknowledging that Bitcoin's current price might not immediately surge, he emphasizes its transformation over the past decade, growing from mere hundreds to tens of thousands of dollars. According to Lee, Bitcoin continues to evolve as a reliable store of value, akin to gold, and its adoption will expand significantly in the coming years. He stresses that although external factors like tariffs and market sentiment can temporarily impact Bitcoin's price, trust in the cryptocurrency will grow, driving its value higher over time. Additionally, Lee's technical strategist, Mark Newton, predicts Bitcoin's price could drop to $62,000 in the near term as part of a natural market correction. However, Lee asserts that such fluctuations should not deter long-term investors. Instead, he advises focusing on the broader growth trajectory of digital assets, which are poised to thrive as economic conditions stabilize. Lee also highlights how external pressures, such as tariff-related challenges, influence consumer confidence and broader markets, but believes these obstacles will ultimately pave the way for renewed economic growth and stronger opportunities for key sectors like financials and digital assets.
You said choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving. And this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
What is a fundamental and the technical backdrop for bottoming happening this coming week?
Well, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news and markets bottoming, but I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So maybe Friday, but it could have already bottomed too.
Outlooks, how about the AI trade? I mean, we've certainly seen signs of weakening, some skepticism there, especially surrounding NVIDIA, which hasn't filled in that pre-DeepSeek gap that it created. Where does that stand? How important is that for this next move forward for the bottoming process?
I think technology is still important for the next few years. In our sector weightings this year, it's number 3. So financials, industrials, first and second. But I think it's just digesting a lot of the prodigious gains the last 2 years. But I don't think AI spending is really going to weaken. I know investors have a lot of good news baked in.
So I think the market, if it does resume a move higher, you think it's the same leadership, or there has been some rotation away from some of the Mag 7 and financials have looked strong. Will it look different, or will the winners come back with a vengeance?
Yeah, in January, the first, let's say, five weeks or so, that leadership was different because it was a lot more tech outside of the Mag 7, and it was financials, and it was some mid and small caps. I think once we're through this rough patch, that's the kind of leadership we think will.
I don't know why we told people you were going to talk about Bitcoin, but now that we did, you do need to talk about it. It's come back a little bit. What did you attribute the move down below 80 to? Just that it's Bitcoin? What do you want?
Yes. I would say what's interesting is Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62. The weekend...
105 to 62. That's just Bitcoin.
Yeah, it's a typical...
Do the math, though. It's like, in a month, 105 to 62.
Yeah, that's a test of the resolve
that hurts
bulls, right?
People that buy at 105.
Yeah, but as you know, Bitcoin makes all of its gains in 10 days. So if people sort of try to time this, they're going to miss out on a chance for Bitcoin to go back to its highs.
And by the end, at some point in this year, you think it gets, because last year you thought it might get to 150 or even higher, right?
Yeah. I think it's going to do better than 150 this year because it's becoming more widely held.
Yeah.
If Citadel starts trading it, it starts to have more broad acceptance.
Okay.
Tom Lee emphasizes the resilience and long-term potential of Bitcoin, comparing it to gold as a growing store of value. While short-term fluctuations, such as a predicted dip to $62,000, may concern traders, Lee advises focusing on the broader picture of increasing trust and adoption in digital asset. He also highlights how external factors, like tariffs and economic policy, impact markets but sees opportunities in financials, small caps, and crypto for strategic investors. As the economic landscape evolves, Lee predicts a shift in Federal Reserve policies and market sentiment, paving the way for renewed growth. With Bitcoin and other digital assets positioned to thrive in the long run, the focus should remain on their potential to disrupt traditional finance and serve as inflation-resistant asset. Do you see Bitcoin reaching new highs in the next 5 years, or will volatility hold it back? What industries or assets do you believe will outperform in a shifting economic environment? Share your thoughts in the comments below.